Dave says, does it matter on education if the markets are slow? I think,
Well, yeah. So today is Martin Luther King Day in the United States, and I kind of wanted to get into it. I don't want to be too redundant, so maybe we'll just wait for. I think we can kick it off, Peter. It's four
yeah, you think
after.
so?
You know,
Yeah, we have.
we're recording this, right? So you're going to send it to everybody who signed up, anyways,
Yes,
right?
yeah, no, of
And
course,
a
yeah,
lot of
yeah.
people emailed me and said they won't be able to make it on certain times. So
Okay.
we'll just email it out to those who, can't make every session.
All right, perfect, perfect. Okay, cool. Well, guys, welcome to the ultimate Forex secret, really, is what I would like to call it. I came to Mark a while ago. The way that this entire thing happened was that I always speak to Mark almost every single day because we're doing this thing together, and I'm helping him with all the technical stuff and recording those videos and helping him put everything together, the website, the Facebook group, and all the technical things, because Mark can do one thing, and that's trade and send emails. So I guess those are two things. And so I speak to him every single day, and I'm always obviously very interested in trading, right? Because I've been doing this stuff since 2008 with mixed success, mostly to the downside, until I met him. And so, we talk every day. So I'm saying, what are you looking at? And so I'm almost getting this kind of education that you guys are going to get in the next 2 weeks every single day. So he's analyzing charts, says, this is going to happen. Then by the time the email comes out, it's always a different trade. Almost every single time I said, well, hold on a minute. I said, hold on a minute. Like, what do you do when it comes down to it? He goes, no. I'm doing the same thing. I'm just doing this, and this. And I said to him, you know what? It's a whole separate thing within itself. And I think in the 32 years of doing this, Mark has forgotten what he's learned or what he's taught himself over time. And so when he sat down and he explained everything to me very, very clearly at execution time, he said, yeah, so these 7 steps essentially is what I do. And we went through that, and I thought, wow, this is absolutely amazing. This is exactly what I've needed. And now I can see finally why it is when Mark takes a trade, he'd say, yeah, this thing is going down like 1,000 pips. He has this unrelenting confidence about his trades, which I think, aside from his analysis being top-notch analysis, but his execution strategy gives him so much confidence that when he enters a trade, no one can change his mind. No news anchor, no person coming in with their opinion, no article online, nothing changes his opinion about what it is. Almost this unbelievable arrogance that the entire world is wrong and he is right. And this is what he uses. He uses the 7-step process. And so I said to him, listen, we need to do something. We need to do some intensive course where people can learn this, because it is what I believe to be the most powerful thing about your trading, because we all know how to analyze charts. We've all seen you analyze charts several times over with videos and live webinars and stuff, and everyone always loves it. But when it comes to execution time, what's that thing that gives you the confidence that you need in order to not only enter the trade and have complete belief in your system, but also use it to eliminate some of the good possibilities that might be burning other people. So if I was to enter trades, I don't have your kind of confidence, and it's all because of this. Now, this is also for people who want to accelerate their learning. So that's the second reason why I really, really begged Mark to do this and put this together, is because one day you're going to want to trade by yourself. You're going to want to just be independent of everyone, even Mark. And he doesn't mind me saying this because he's not going to be around forever. In 20 years time, what's your retirement plan? In 30 years time, 40 years time, depending on what age bracket you're in right now, you're going to want to just rely on yourself and be in a place where you don't need someone like Mark, where you don't need to buy another Forex EA system, where you don't need to pay $3,000 for yet another Forex course or anything like that. And only by having an immersive experience will you be able to achieve that, and only working underneath someone will be able to achieve that. No 2-day or 3-day course will teach you that, and I know it because I spent $25,000 on courses. I went for a 2-day course in London on stocks. I then went for a 2-day course in London on Forex, and then another 3-day course. And then I bought coaching, and I did all of that stuff, and none of it helped me in the end. And I just wasted my time. And I was, a bit younger back in those days, and I had to borrow all that money from my parents and face the embarrassment in front of my family when I said, I'm just not going to do Forex anymore, when the broker finally ran off with my money, the final nail in the coffin. And I realized that you can't do that in order to learn how to become a trader. You have to see what their analysis is, see how they trade every single day, execute trades with them, get on live with them, and learn from someone over a longer period of time. It's the only way to get good at any job, because this is a job. This is a business, right? The fact that it could take 10 minutes to an hour a day doesn't mean that it's not something that you have to be very, very good at. And so this 2-week program that we've put together is designed to accelerate that, so that you can get 10 trading days of just Mark when he comes at execution point, and you don't have to wait sort of for the monthly calls, or if you're a master pattern trader, once a week. This is really to accelerate your learning. So by the end of the 2 weeks, you're not only going to know the execution plan that gives you incredible confidence, but you're going to be that much further ahead in terms of being and having that independence that you need. And of course, for the next 2 to 5 years, 10 years, whatever, you can just copy Mark's trades and not try and become independent. But that's not a retirement plan. That's not a long-term solution for you. So hopefully, if you guys understand that and agree with me, please put a yes in the comment box. And that's the entire reason why this program was created, because I told Mark how valuable this would be. Mark hates selling anything, and he hates coming to people. And I said, listen, just put it out there, charge $500, see what people think. If people want it, they can have it. If they don't want it, then they don't have to take it. Okay. And so we put this entire thing together just for you guys, and it looks like everybody is on board with that and agree with that. Raphael, yes. Dave, to be independent. John, yes. Trent Johansson, yes. Kenneth, yes. Liz, yes, yes, yes. That's the spirit. Lauren, Anish, Dave. He says, why? That's why I paid. Yeah, Dex, excellent. Okay. I'm so glad you guys understand that and grasp the seriousness of this. And that's why I want you guys to try and come to as many live sessions as you can. I know it's probably impossible for some of you to do every single one, but try and attempt as many as you can. And we'll definitely put the recordings up in the members area. So Mark, why don't we then get started? Looks like everyone is raring to go to see how you execute the trade, and then what the trades are going to be before anyone else gets that email. So you guys are going to get to know that too. So why don't we start with the 7-step cheat sheet and how you go about that?
Okay, so Pete, I'm just going to have to download it here. Let me get it on this side here.
Okay, perfect.
Okay, so
yeah, so everyone can see it, so you guys can see the 7 steps.
Right.
Don't expect you to remember
I look at about 30 different instruments in my portfolio. When I open up my trading screen, this is basically my instrument panel here, and you can see it's got a lot of currencies, it's got some commodities, it's got the stock indexes, it's got gold and silver and some other things. So there's, I don't know, 30, 35 different choices in a menu, and I quickly go through these, and what I'm trying to discover very quickly is which ones to eliminate right off the bat. So that's the first thing I do. I just eliminate all the no-go pairs, which gets rid of whatever, 20 to 25 of them. And then I assess the what I call the quality of the bars on the remaining charts. And again, I'll go through all of this, and then I go through some visualization to see, okay, if my analysis is correct, will this follow through in a certain way? And I do that on the other side too. So I'm saying, okay, if I'm incorrect, does it make sense that this market could go this way against me? And I draw a line in my mind, or even on the chart, to see, does this make sense? And then I do it on, longer term time frames, and then keep whittling it down. And again, my whole objective is to come up with, one or two or three, high quality. The idea is not quantity, it's quality over quantity. So, at the end of the day, sometimes after looking at 30 things and staring at it and going over and over, I literally can't make the case for doing anything. Again, I'm looking for just high probability trades. And, today it's a little bit of a difficulty because there's a lot of choice. We have Martin Luther King holiday in the US, which has made for a fairly static market condition. So you have all these inside trading bars where you had very volatile session on Friday, followed by this holiday session today, if you will, where, as you can see, this is the Dow Jones 30, where you have this inside day bar. We had a very volatile day on Friday, big high and low, and we have this small range today. And as you guys know, I do look for inside day bars as part of my insurance day proposition. First I look for a technical formation, which we have here in this descending wedge, this double top. This Dow Jones is now at a thing, and now we have this inside day bar. So it would be very easy for me to put a sell stop under here, and that would be a very justifiable thing. And that's one thing that could go on my list of menu items, which are the stock indexes. And then I try and go through each one of the stock indexes and see which one looks worse relative to the other one. So here's the Dow Jones, here's the NASDAQ 100. You can see they all have these inside day bars with pretty much the same look. The S&P is actually probably the weakest of them all. It's right at or near the support area. And so you've already come off a tremendous amount in this market from the 2080 area to the 1880, 200, S&P points is just a gigantic decline. It's 10% in the first week of January. So, and you're at or near, support here, which doesn't mean that this market still can't go, through here. But, is it the most high probability trade that I can come up with today? And at the end of the day, that's really what I'm trying to do. I'm trying to look at all the scenarios, go through all the scenarios in my mind, and then drill down to the best trade. So this certainly could be a menu item. We have, a market that's, come off a pattern, it's in a downtrend, and now this inside day bar could be a setup for a continuation of that trend. Now,
Yep. Sorry, Mark. I'm gonna interject with little questions here because we have people with different skill levels on the call, and so I'm just gonna play dummy, which is not hard for me. So this is the part where you look at every possible chart and you look at the different setups and you do your analysis. And so as people can see that there are a lot of choices and there are a lot of inside day bars, and right now you've already identified like 2 or 3 markets with that in. So is that the first part of the cheat sheet?
So, okay, so basically this is what I would do, and I started right in the middle, and I really, go into descending order. So I start with my instrument panel, and here's my portfolio. And again, mainly currency pairs. These are, stock indexes, German, Hong Kong, etc. Here's some metals down here, but here are all, so let's just start. I just start from the top and drill down very quickly and start, isolating in my mind which are the cases, and actually by virtue of elimination I come up with a lot of it. So right at the top is a potential trade here. We have this Australian dollar, Canadian dollar. I spoke about it last week, where you have this market that's been in an uptrend, and it could be setting up as a possible double top here. And I think we had a trade suggestion over the weekend that maybe this would come off. And now we have this reversal and inside day bar. And again, perhaps this is through so much experience of just looking at the markets. Really, the markets have an underlying structure. I mean, they typically go in, ranges where they form these channels, and then they don't just, come right off. So here you did have this up market, it came off, and now it's, flirting around basically at the new highs here. So it doesn't, markets just don't go straight up, then straight down and all over. There's an underlying structure to the markets that I've just come to visualize over time, and just by experience, and it's even hard to explain, to myself sometimes, because, why is a double top sometimes not a double top, and then other times it is a double top, and it's it's just by looking at the structure of the market and kind of having a feel of what's going to follow through and what isn't. And so one of the things, so let's take the devil's advocate case, and let's say I'm looking at this as a double top, which I was earlier. We have a reversal here, we have a reversal here. Now we have an inside day bar, and now my thinking is, okay, we could be, having some resistance here, and that could definitely be the case. But now, following my style, if I were to put a pending order here, and this is going to be applicable for a lot of trades today because we have this, inside day bar with now the close kind of well off the high and low of these inside day bars. So according to, what I do, I like to see something close, lower to its high relative, if I want to get short, and I would put my pending order there. So if I put my pending order there, then I put my stop loss somewhere, at or near the unchanged level or above. And ideally, if this market was looking like it was going to be weak, I would like to have seen this inside day bar, almost fill up this entire candle and close, pretty weak, at the bottom here, at or near the bottom, which would, again, have a look to me of being much heavier. Right now, this is, by default, by definition, it's an uptrend. And we have to give the onus and that this is still an uptrend, that the onus is still on the bears to prove this otherwise, because this is still a market that is heading up. And so, yes, I saw this reversal within the context. This is a double top, but I don't love it. And again, we're trying to drill down to the most high probability trades. And one of the other things that I also want to focus on, and this is going to be apparent for all these inside day bars, you can see that the low here is well above the previous day's low. Okay. And what that means is, even if we put our sell stop here, the market would have to travel from where it is currently through this low and then kind of through this low too. And so ideally, I don't like to see this much white space between this low and the previous day's low, because now the market's got to travel through all of that, which, this is providing some resistance at this level. And I realize that I'm kind of, not being very, and it's only by going through this a lot that you'll, begin to understand what I'm looking at and why I'm looking at it. But you have to understand, that the market would have to travel all through that low and then this low and then lower through all this. And it possibly could do that, but I'm just not seeing it. Let me show you a much more,
so Mark,
let me yeah.
So you looked at this market, and because even though the analysis looks okay and there was a key reversal and then there's an inside day bar, technically fits your strategy, but the quality of the inside day bar wasn't there.
Well, just the quality of the whole setup is not there. I would like to see that inside day bar, come more into the low of the range. If I'm going to put a pending order underneath it, I don't want to see so much resistance. So if I put a pending order here, I would have this whole part of the day. And if you looked at like an 8-hour or 4-hour, you'd see all these bars that this would have to travel through, and it would have to, form all this kind of, go through all that resistance. Whereas in contrast, let me show you the difference of a trade that I'm looking at on the upside. So here is a trade. Now, I wanted to go in sequence and show you how I go through each one, but I just don't think I was very clear, and it was hard to make myself clear unless I showed you something in contrast. So here's something where now we don't have any of the same resistance. We have a market that's going up. This is the New Zealand dollar, Canadian dollar pair. Pretty exotic pair. Not too many people look at it. It's a daily chart. And of course, the main trend, sorry about that. This is an uptrend. Week over week, day over day, this has been traveling higher. Also, you have this double bottom price action here. It's almost a triple bottom, where you had a nice key reversal here. The market, came to this level, made a new low and then closed on the high. You kind of had the same thing here. And now you have this inside day bar sitting atop here. Now, the difference between the pair before and the other one is that you can see that there's no price here that let me do this to give you kind of by way of comparison. So let's say and let me provide a little contrast here. Let's say this day's market action kind of extended to here. sorry, let me make it cleaner. So what I'm trying to show you is that this market doesn't have the same. So if let's say this, this bar extended up here and we put a buy stop, then it would still have to extend through this bar. This previous day's bar would still have a little resistance area that if we put our buy, that would have to travel, but it doesn't. There's just clean white space above this. There's no, obstruction other than this price action here. And so I don't know if that's a little bit clearer why I like this versus the Australian dollar, Canadian dollar. So I like.
Hey guys, put a yes in the comment box if that's clear, just to let us know.
This is an uptrend. Okay, so first off, we want to, the first thing I do is I identify what is the phase or the condition of the market. If you remember back to the webinar, first step I do is I open up a chart and say, okay, is this going up? Is it going down? And this is clearly going up. Or if it's stalled out, is it forming a pattern that looks like it's reversing? Is it turning from bullish to bearish or bearish to bullish? In this case, this market is going up. Yeah, it did stall out. You saw that's a reversal candle here. The market came up very well off this reversal. I think we actually took a trade in here and made a few pips, short here. But the onus, I mean, the thrust of this market is an up market. And I think everyone would agree with that. On the daily, weekly, and monthly, this is an uptrend. So we're basically looking to get in lockstep, if we can, unless there's a pattern that suggests it's turning. So we have an uptrend. We kind of came off, and this is what I love to see. I love to see what I call stored energy. So, yes, you can get long up here if there's a signal, but, it becomes an increasingly a riskier and riskier proposition, like we saw in the stock indexes, where you have a huge move and you might have an inside day bar at the top of this, but, it's not as nice as if you got an inside day bar, somewhere down here in the middle of the move and you still had that. So I look for what I call stored energy. So, you have an uptrend and now you have this market kind of came off here, and so it's like an elastic band that pulls, and then you let it go, and then you stretch it back to to pull again. And so this is like a slingshot, and this is a beautiful setup where you have you have your an uptrend, you have the reversal, double bottom, you have the inside day bar, and then you have clear blue sky here. There's nothing really impeding it. There's no price action impeding it there. And so I don't want to see any obstruction. I want, my whole thing is that when I put these orders in, I want it to be triggered and just to go, like GBP CAD did in 3 minutes, 129 pips. I want to be able to visualize that the market can get from one level to the other without any obstruction. And is it clear that this looks better on the upside than the Australian Canada did on the downside? Now, I'm going to show you a number of inside day bars where I could make the case of getting long, but that they still have some obstruction to get through, where this is very, very clean. There is no obstruction. So let me provide another contrast here and show you the nuances and how subtle this is and how it even messes me up. And I got messed up the other day because sometimes your eyes just don't, for some reason, don't let you see the whole picture. You get so excited about seeing something one way that you miss something, and I missed something here. And I just want to spend a lot of time on this because this is very subtle, but it's really, really important. So, I made a short recommendation the other day in the, this is the pound versus the New Zealand dollar. And I know I'm going a little out of sequence here, but I really want to stay on this theme of, obstruction and, and looking for trades that look like they'll just go from one level to the other. So you can see that we're in this band, that the market is primarily in a downtrend. And now I saw this very nice key reversal bar that then set up what looked like to be at the top of this channel, and it looked like it could be, now you have this inside day bar, and now it looks like this should go here. And at first thought, this is what I was going to do. I was going to put a sell stop under here. And this is what I've found through experience, that when you have bars like this, and I don't know if you guys can see it quite clearly on my screen, where, you know, it made a new high, closed on the low right at this area where we might want to get short. So let me just, again, make this thing. So I have all the things I needed to, you know, make a short sale the other day. You know, we have a down channel, we have a huge range bar, key reversal where it closed on the low, and now you have even more of a coil. We have a key reversal and an inside day bar. And my first instinct was that, you know, I want to put a pending order here. And I don't know that I can still rule it out, but I've learned that when you have bars like this in the vicinity, so now this would have to, it closes right in the middle of the bar. If we put our pending order under the low, the market would have to travel from the unchanged level to this level, which is, I don't know what that is, 80 or 100 pips or so. And then it would have to travel from the low through this level right here. And, you know, can I make the case for it doing that? And, you know, like I said, I'm trying to focus on the most high probability trades. And, you know, there's a certain, you know, part of my analysis that said this is, you know, what you look for. You look for a key reversal within a down channel and, you know, have an inside day bar on top of it. You have this coil. And, you know, logistically, this should provide a clear path here. But for some reason, this bar is an, you know, would provide an obstacle for prices to just seamlessly, you know, go through there. So is that, let me go through a couple of examples of what I, you know, think is a clean trade versus things where I think there's a short-term obstacle in its way. And hopefully this will become more and more apparent as we go through it.
Yeah, this is good stuff. Actually, I've never heard you go into so much detail about just that last little bit, because according to your analysis, I would definitely have entered this one.
You know
short.
what? And I did enter this the other day, and then I just saw this today as I was, you know, trying to figure out, okay, what am I going to do for the presentation today? I'm really honing in on, and these things, they look sneaky, they look benign, but you know, and sometimes your mind, you know, your eye won't even see it. I was so quick to see this downtrend, this reversal. This is exactly what I look for, and just to you know, really you know, so you know, here these, you know, are the last line of support, you know, in this market before it kind of, you know, went up, and this is not you know, good support. Both these bars settled on the low of the day. So, you know, if I talk about the quality of the bar, when I see something come to the bottom of a channel and I'm looking at something turning around, I want to see something like this, where it makes a new low, then recovers and closes in the opposite side. And then maybe you have like an inside day bar like you have here. And then the next day you have another situation here. And now you say, okay, this is a downtrend, but, you know, now you're starting to see evidence that this thing could be a turnaround. And the quality of these bars are really, really bad, which suggests that the low in this pair has not been made, which tells me that, you know, maybe I'm so wrong. I'm still wrong. Maybe this could make just such a huge move and it could go through all of this very, very quickly. So I haven't really ruled it out per se. It's just part of the collection in my process. And again, I'm trying to identify the best trades, you know, that I can. And I'm not, I don't know that still can't do something like that, where it could just go down horrendously, because this is a down move. This is this reversal. We have a, you know, coil today. And then if we break this, but again, my experience has told me that once we get into this area, you know, you're going to find support. Once you've, you know, you found a little support there, and once we get below here again, you could get the same thing where it gets up here and then all of a sudden you get a sneak attack the other way. So I think I'm going to eliminate this, even though it was looking like it was on my plan, only because I saw this obstruction, for lack of a better word. And again, you know, I talk in terms that, you know, as if I would explain this to a 6-year-old. And that's really what I'm trying to achieve here. I'm not trying to, you know, denigrate anybody's intelligence. But when I try and explain this, I try and, you know, and explain it in such a way that a 6-year-old would understand it. Because this, you know, just like Steve Jobs identified with Apple, when you keep it simple, it just, you know, works a whole lot better. And that's the thing, what we're trying to do. We're trying to avoid confusion and, you know, just have simplicity and identify, you know, high probability trades, and then combine it with good risk management. So I, you know, I would, you know, eliminate this at this time. I might put it on a short list. And so this is what I do. I kind of put my list here and say, okay, here are trades to consider. So let's put just short GBP NZD. So then, I come up with the, the short list and then drill it down to, a couple of trades that I'm really honing in on. So I'm going to put this on my list, and then I can revisit it after I finish all my analysis. So any questions? Let me just show you one other thing, just what I mean by obstruction, and then we can kind of maybe get into a Q&A over that. So here's another market that I liked last week. Euro versus New Zealand dollar. And so here's my thinking here. And again, a lot of confusion today because you have this holiday day here where has caused a pretty benign day where you have everything's like an inside day. You had huge volatility on Friday, no volatility today. And so you have these, short-term, what look like trading opportunities. So here's kind of, where I get into a bit of my own confusion, where we took 300 pips out of this trade last week, where I, identified this double bottom. And by definition, a bottom is a bottom, and it should, continue higher over time. So now we're going to be probably ideally looking for opportunities on the upside, in this pair. So, we have this presence of this inside day bar, which again is something that I look for. But the quality of this inside day bar is such that, first off, it's, it looks like it's going to close. And again, caveat is we're still about an hour and a half away from one set of closing. So these closing prices can, adjust quite a bit. And how it closes, I mean, if it ends up closing way up here, it could, change my decision-making matrix. But again, we have a situation where we have this piece of white space between the last session high and this session high. So now if I was going to put a pending order here, let's just change the color to another color. Let's say I'm going to put my buy stop here. Prices would have to travel from presently unchanged to here and then get through the resistance area by virtue of Friday's high. And like I said, I want to see something that's clean, where there is no resistance there. In addition to which, we've got all this noise to the left here. And I don't think that this is just going to be, such a clean move this way. I don't know how this is going to, proceed in light of all this stuff to the left. But if we contrast this again with, this trade, we don't have that obstruction. We do have a little bit of price, history back here. But, we have just blue sky in front of us here and some white space that even if we hit resistance at the 96, that's still about 220 pips higher than here and would afford us a nice trade. So if I put, buy stop here with about 180 pip, take profit like we did in a series of trades last week, even if the market, provides a bit of some resistance here, we, likelihood was we could still carve out a nice trade with no resistance here. You don't have any price history to the left of this bar that this has to travel. The close is relative, to the, the high. And that's also the nice thing in these small range days. We don't have to risk a lot to take a look at this. So we put our buy stop here, put our sell stop somewhere a little bit unchanged or a little lower. And it's probably, I'm guessing, probably a 40 pip risk here for what could be a 180 pip move, which again is 4-to-1 risk reward. That's something that I really like. That's high probability, and the risk reward, justifies it. Could I get into some of these other marginal trades and could they work out? Maybe, but the risk reward isn't the same, and I don't see as clean a move as I do. And so again, you have a series of these inside day bars in, in a lot of things. So we looked at what Euro odd. I like this on the upside too. We have this inside day bar here, but again, you have this resistance by virtue of Friday's high way up here, and the fact that this, price history is way off the high today. And now we've got to travel here, we've got to travel through there, and we've got all this noise to the left that I don't think is just going to, seamlessly travel through. So ideally, I would like to see this, do a lot more work, go sideways, flesh it out, sell off, and give me another look in order to give me a much more high probability trade in euro odd. Now, could I be wrong and this thing just shoot up 500 points tomorrow? Maybe. I'd be pissed. But, again, we've got to, look at, the most high probability trades. And, I focus mainly on the risk also. So was that an explanation that's clear to some? Would some people like me to, elaborate that on a little bit more? Peter, was that, somewhat clear
no,
to you?
I found that really, really clear. And usually when I understand something, everyone else does. So that's good. But we'll wait for the comments to come through about that. We do have a lot of questions that have come in, actually, from Sergey, Raphael, HP, Trent. Trent has a couple of questions. Liz says it's fascinating. Dave says, got it, was great. Perfect. Great explanation. Anish, is it Anish or Anish? I don't want to get it wrong.
Probably a niche.
Anish, yeah. Clear to me. Dex says clear. And we have a couple of questions that have come through whilst you were going through some of this stuff.
Sure.
Now Trent just said, do you always start with the daily time frames?
Yeah. So yes, I do. And then, what I'll do is I'll look to a weekly or monthly if I need, some further validation. And then sometimes I'll drop to an 8-hour time frame if the markets are a little bit more volatile and whatever. And if I'm doing that, that means, I'm either not crystal clear or I just want certain other validation. But yeah, this is, I try and keep it simple. This is just long enough to give me, a picture on a time frame, and then if I need other verification on a monthly or weekly, just to, keep myself. And again, like Peter said, I do a lot of visualization, so I try and say, okay, if this is going to work, let me just get rid of this. And so let me just do a visualization on this thing, because I think the euro looks stronger versus the Australian longer term. This chart isn't a thing, but so first off, can I see the market going down like this? Well, prices really don't. I mean, when you have something that's this thing, you don't typically go this, like that. The markets, again, there's a certain structure to markets, and they need to build a way before they fall. So even if they are going to reverse, they need to build a way before they fall. What I call stored energy. Sometimes you will see something that does a V top. It just moves to one thing, then goes down, against itself, but not so much. So the structure, has to make sense to me. And that's the thing. I kind of look at the structure and say, okay, if it were going to go down, do I have a reversal here or whatnot? So I really can't make a case for this going and looking like this right here. Although, it's an inside day bar, and these charts are, pretty crazy right now. And this is what I was saying to Peter at the beginning of the year, is that there was a concern that these markets are just kind of nuts. I mean, when you look at a chart like this, you have this descending wedge here that it fell out of. Then you can make a case that you've got an inverted head and shoulders here. So they're going from all, and then they're breaking to one level to the other, and as they break up, they're breaking down. So again, we're just trying to find the ones that are simple and eliminate things that we don't. Part of the thing is, when I'm looking at 30 different instruments, sometimes choice in and of itself creates a lot of confusion. Most people are used to just trading 3 pairs, pound or euro USD, especially if you're doing an algorithmic trading thing that usually does 1 trading pair. And if you're doing that, there's either there's something there or it's not. But when you have a choice of 20, sometimes there's just so much there and so much stimulus in a way that it can kind of be overwhelming. So what I am trying to do here is just reduce it to 1 or 2 trades that I really like, and just eliminate those that, if I'm confused and it gets away from me, if this thing goes up, tomorrow 500 points and I can see this market going up, there's a part of me that's, I'm such a perfectionist that gets upset. But, for the purposes of this exercise and what I'm trying to do for you guys, which is just giving you the best high quality trades for the least amount of risk, that's what my objective is here. So let me just keep drilling through this. And so here's our list. So odd Swiss, don't love this. It's, it's kind of neither up nor down. It's in the middle. You have this inside day bar, but, I can't make a case for anything here. Odd yen. I like this long-term down. I think the Australian's going down, and I think the yen is getting stronger. I've done a whole bunch of reports on this. I'm not going to belabor it. So I'm going to look to get short, Australian yen, New Zealand yen, anytime I can. We have this inside day bar, but again, look, you've come from what, 91 to 80. you've had, an 11,000, pip move here, or 1100, or whatever you want to call it, straight down. So, is this the most preferable time? I mean, again, if I put my pending order here, it would have to travel a long way and then still go through. And, this is a market that's pretty mature already. So I would like to see it kind of snap back or do a little bit more work here, create a little bit more coiled energy like we see in the New Zealand dollar CAD long. So again, I could miss this. This could keep dribbling and going down. And I do.
Sorry. Is this possibly a case of where you draw the positive future pace and it just looks a bit extended? Is that what you mean?
Well, so again, I'm trying to drill down to what the two best opportunities today. One or two trades that are my best opportunities. So I'm looking. This is a downtrend. This looks really nasty. I think that this bar has probably put a cap on how high this market's going to travel, and so we have an inside day bar here. But again, I mean, if it closed a little closer to the low, that would have been a little thing. I mean, if we could put in a market order here. It just I would like to see a bit of a coil. So I'd like to see it just do a little bit of work in here, put some inside day bars, maybe come up here, do a key reversal, and then we can get ready to go again. So I'd like to just see the market store some energy and then go again. Right now, there's no stored energy. It's just gone from 88 to 80 to 79 in a straight thing. There's no coiled energy. And can it keep going? Yeah, absolutely. But there's actually a couple of yen trades that I'm looking at doing something on the other side today. And let me get to that. So I do expect this to go down long term, but ideally I want to see more coiled energy and another signal to get short here, because this is just falling out of bed very quickly, and the probabilities of it just keep going and going without any kind of obstruction probably not great at this point. And again, if it does, I just got to watch it and let it go.
Okay.
Even though I think this is going down. So let's
Okay,
just
so your visualization for that chart is it needs more stored energy for your brain to see, okay, that this can actually happen in your mind.
Sure. I can see this going, keep on going down, and in which case I'd miss it and I get very upset. Because, and that's the thing, it's, so here's Australian dollar, New Zealand dollar on the monthly chart or the weekly. I was looking this on the monthly or weekly, and I could see this still going much further down. So here's the Australian dollar, New Zealand dollar on the monthly. And I think we, have got to get under these lows and, somewhere in here. So I see the Australian going down more relative to the New Zealand dollar. But when I look at the daily chart, yeah, I still think this thing's got to go down. But now it's got to, it's got to clear all this stuff right here, right under here. So it's not clean. It's not something I want to get involved with at this point. And, then you got some support over here. So prices have to travel through all this, then get through all this. And over time, they probably will. But, this is not something that I want to tangle with right now. So, here's CAD yen, and here's something that I want to talk about. Okay. So here we have a market that's just, totally fallen out of bed, gone straight from, whatever, 93 down to 80 in a straight shot. And now we have the first inkling of a reversal. We made a new low for the day, and it closed, closer to the high on what I call a reversal day. And now I think this is going to short-term stall out, this downtrend. It could just play around here. It could go up a little bit. Do I expect anything great shakes here? Again, the market doesn't go straight down like this and then with one bar go straight up. But here's something, and here, here it's a yen cross pair, but just see the difference, what I talk about, kind of a coiling and a building of energy, one versus the other, and why I like the Swiss yen versus the CAD yen on the long side. So here we see a reversal thing, and it's really just a crapshoot saying, hey, I believe that we've kind of stalled out here, and that we, probably mess around here and go a little bit higher, but you're not going to you just don't turn around on a dime where you just go straight down and then straight up like that. But here, and see if you can see the difference between, this is CAD yen, Canadian dollar versus Japanese yen, and here is the Swiss franc yen. Can you see a little bit of difference there, where here you kind of got a little bit more of a, the Canadian yen looks just like this now, where you have this one bar right here today. So that's the Canadian yen today, and this is the Swiss yen today. And you've got a little bit of a build out, and this is what I'm looking at. And this is kind of sneaky, but I've tended to make a lot of money out of little trades like this, where again, this is a downtrend. I do expect the yen to go stronger and most of the yen pairs to keep going down. But, we've had a tremendous sell-off already. And so I think you've got some kind of support line coming in. I didn't draw that too well, sorry. Coming in pretty close here. So you've got a lot of symmetry there. And then you've got this guy right here that started to tell you that this market may be finding some support in or around this area. That was your first thing. Then you kind of had another support there. And then you have this very, very benign looking guy right here today. Made a new low and closed on the high. And it's a very small range, doesn't look like much. But this, could provide, some energy to the upside. But can you see how it's a little bit different than the Canadian yen, where this is basically what the Canadian yen looks like right now. So it just reversed, and now it would have to continue going up straight here, where this has built out a little bit. It's created a little bit. If you're going to try to make a case for this thing to maybe come out of this thing, you can see how it's built away from this wall. So it's kind of built away from this, where the Canadian dollar yen is still right here. It hasn't built any energy away from that primary downtrend. Do you see that? Does that understand it? So this is built away from its, from this huge, wall, this downtrend. And again, my whole premise is it doesn't go like this and then straight up like that, like it would have to in the Canadian dollar versus Japanese yen. But this has built out a little bit of some action away from this, and now it's and now you have these reversal things, and you guys don't have to take this trade. I'm going to take this trade. I'm going to put a buy stop here tonight. And the nice thing is that I'm not going to have to risk a lot because unchanged is so close. And my feeling is if we get above here, we could just shoot out here pretty quickly and get a nice trade, on a risk, versus thing. But, can it, and then now, do I, let me just visualize this the other way. Can I see this going down the other? And I suppose you can. I suppose, can you make a new high and then close, go down and look like that? I suppose you could. I mean, this is a very powerful downtrend. But again, I think on a risk reward basis, if you notice right here, these days look pretty benign, where you see this very, very small inside day bar. And it looks like nothing. And right here, you would have said the same thing. This is at the bottom of an extreme down channel. It was a huge risk, pretty outlandish call to say, let's buy this thing. But if you'd put a pending order right here, look at that trade. It's like 500 pips straight up. And I think you may have something like that, where, I'm looking at this bar as kind of controlling, a lot of action to the downside. But I think you could see a 200 pip to the upside very, very quickly out of something like this.
Yeah, and because you said the bar is so small, it would be like a 25. What would that be, like 25 pip stop loss?
Nothing. Yeah, I mean, let's take a look at it, because that's probably what I'm gonna. So, I look at other charts too. So this is NetDanya. The charts I'm looking at right now are NinjaTrader. So NetDanya allows me to kind of drill down a little bit more. And I kind of look at different charts just to see how it looks on other charts. See, it kind of looks very different on this. So, for instance. And I'm sorry about this, when I change the thing, it changes the color, makes it very faint to you guys. So the parameters for this are, the high right now is 116.92. And the close is 116.75. So it's only, 17 pips away. So if I put a buy stop, let's say, 116.94, about a 1 or 2 pips above there, and put a stop loss just under the close at like 116.65. We're talking about a 30 pip risk for something that I think we could make let's say at least 100 pips. So it's 3-to-1, which, would justify the risk reward. But having said that, I mean, this bar right here concerns me. I think it, is putting this is the obstruction I talk about. And this is a very, very heavy downtrend. So, there's certain things that I would do for myself, and sometimes I'm not sure whether I should send that out. And that's the conflict I get. And sometimes I hold back, and I see the trade explode, and it's just because I'm trying to micromanage and send you guys the best trades, even though I'm a little bit crazy and I try out certain things. So it looks obviously it looks different on this chart than it does on this, which sometimes makes things clearer. So I like this trade. I'm going to put this on my short list of long Swiss franc, Japanese yen. So we'll just put that on the list, and then I'll revisit how I feel. I'll go through it and drill it down, put my short list together, and then figure out which ones I really want to go with. So let's just keep going through this process. Copper, which is just another commodity I look at, it's on the lows, and this is going to be interesting when you compare it to gold. So other than all the commodities, copper, oil's making new lows. Copper's making new lows. I think silver's making new lows or at the low, but gold is hovering a little bit above. You can see that it's not on the lows, that it made this double bottom here. We made a nice trade here where we got long right here, got out right there, 265 pips early in January. And now you have this inside day bar in this formation. And, I'm jumping around here, but this is something that, I'm looking at for tonight. This is, so we saw a couple of correlations, right? So we correlated this against some other commodities, copper, silver, oil, and saw that all those other commodity items were at or near new lows, whereas gold is off its recent lows of 1,050. So you kind of have this bullish divergence, if you will, where one metal is now not making new lows with the other commodity items. So you have this double bottom. We did, successfully, get in this trade on this inside bar right here. So we first identified this pattern. So this is a primary downtrend. But then we saw that there was this short-term double bottom. Again, we don't just jump in. I waited for confirmation, waited for this inside day bar at or near the neckline, and then put a take profit right here, 1109, and we took a nice chunk out of that market. Now it's settled back, and this is kind of ideal because this is typically the behavior of a double bottom, where you bottom and then it breaks out, and then it usually reverts back to the neckline and under it, and then when it comes back, it's usually a pretty good sign. So again, this is kind of closing, lower relative, but this is still an inside day bar. But I think it's worth a shot to sneak in a buy stop above here. And again, we've got some pretty good open space here for this to travel.
You wouldn't worry about the fact that the high of the previous day is.
Yes, yep, there is that element, but I think you're sufficiently, like I'm saying, it's closing relative to the high and low. And if it just continues down here, that's the great thing about the pending order. No harm, no foul. But I feel that if we close on the low and all of a sudden, make a new low and then turn around and then all of a sudden take out the high, there's sufficient, blue sky here that we could have a nice trade. So yeah, it's a little bit different than I think, those Euro odd where, you're well off the high and you're at the high. So if you recall those other trades, instead of being, kind of in the middle and right around the neckline, the Euro odd, you're up here already. So you've already made a huge move, right? And or you're even closer to the old highs. You're actually like up here. You've got all this stuff to the left and all this noise. And again, this is just part of the judgment, part of just stuff that I almost can't explain. why I like something versus another. And it's just, I think, just going through this with me, guys, and hopefully, you'll understand it. And I think that what I'd like to do by the end of it is, the end of 2 weeks is that have everyone suggest a trade. And then we can look to see, how everyone's interpreting this thing. And maybe I can learn something, and you guys will go on to be better traders than me. But what I'm trying to do is really kind of explain that there is a structure to the markets. That's the first thing. There's a basic look and a feel and a structure. And if you can start getting a feel for that, then you can start looking at these nuances that I've learned over time. So again, this is something that I'd like to put on my short list for tonight. And it's interesting because you talk about these obstructions, and look, we had this thing back here. See this bar? And yes, prices did, when they got in that region, look, they just settled back. And now if they retest it and they want to kind of go back here again, this could be pretty interesting. And then when you throw in the fact that we have now a divergence, and I don't know if everyone kind of caught that concept, where I look at this commodity item relative to other commodities. For instance, back in September, I did a special stock market report, and I was noticing that the NASDAQ 100 at the time in September was going to all-time new highs versus, I think, its recent highs in like the April-May timeframe. Whereas if you look at the S&P, the Dow Jones, and all the worldwide stock indexes, they weren't anywhere close to their old highs. And that was what I was noticing as a bearish divergence. That was my first sign that there may be some trouble with the stock indexes. And this was all the way back in September. So, I do look at some correlations. I try and keep it simple. You can just look at this chart and make an independent decision. But with experience, if you want to compare it with some other things, that's fine. And what I'm noticing is that this is, diverting. This is looking more bullish than, copper, platinum, silver, oil. On top of which we have the short-term, double bottom. We have a pullback, to the neckline. We have this inside day bar. And and now this bar is so narrow, Pete, as you've noticed, so that even if I'm wrong, I'm going to take a very, very small risk for what I believe could be a tremendous trade. This could put us into another 300 pip move right here. So versus the 30, 40 pips that we're going to risk tonight. So I think well worth that. So I'm going to add that on my short list here. So this is long. XAU USD, which is spot gold for those who don't know. And some of you in the United States who can't trade it, if you want access to a broker, just let me know. And we can hook you up with a regulated broker in Australia, a friend of mine who will take your US accounts, and you can trade gold. I'm very successful in gold, and you may want to take advantage of that if you can for any reason. So I like this gold. Right now it actually is just sideways. It's to the untrained eye, there's nothing much going on. It's not very interesting, but I think it could get interesting very quickly and get up into this area here, or not. And again, that's the beauty of the pending order. We're not, if we don't get put in, no harm, no foul, we'll cancel it by the next day. So again, I'm sorry, I'm going out of order here. Let me just quickly go through it. We talked about Euro AUD. I like that long, but it doesn't really, same with EuroCAD. This is an uptrend. It's an inside day bar, but we're pretty far off the high and low, and I'd just like to see it do a little bit more work, although it just could keep going. It's a very strong trend here, but on a risk reward, probably not the best place to get in at the moment. Same with Euro Pound. Euro Pound, you see we're closing much closer to the high of this inside day bar than, if you looked at all the other inside day bars, we're like right in the middle, and this is closing pretty close to the high. But again, we've got all this, space to the left. And let me just, I was looking at this on the, monthly chart or the weekly, if you will, Euro Pound. And, I noticed this, double bottom. We've kind of gone out of here. But if you see all of these arrows, these down arrows right here, this is going to be an area that I think is going to be, pretty good resistance for euro versus pound. So while we may get a little bit higher here, I think you could start seeing some noise coming in thing. But right now, you've taken enough out of a double bottom. Ideally, with these double bottoms, you usually do get a retracement. So, ideally, I'd like to see this thing retrace back to 75 before taking another look at this thing. So, I don't want to mix up, get tangled with this tonight, because I think, again, this resistance, even though it is closing on the the high of this inside day bar, I think that this obstruction here will impede immediate progress, and there's probably some other better trades. Euro yen, kind of the same thing as the Swiss yen. I mean, now's the choice. Do you want to take the Swiss franc yen versus the euro yen? I think that you've got some short-term signs of a double bottom. I kind of like the look here of a sneaky low, at a new low, where people aren't really watching it, or it's off somebody's radar. And I would be more inclined to take this versus euro versus yen. Kind of has the same look and feel. Euro versus New Zealand dollar, we kind of talked about this. I do expect this to keep going higher. But again, you see this is closing in the middle of this bar. We've got some resistance here. So ideally, I'd like to see this do some more work, put on another inside day bar here to tomorrow, and then maybe give us another look and coil for another move. And again, we're not trying to get on everything here. There's 30 things that we're looking at. Probably could make a case for half of these things if we really wanted to, but we're just trying to drill it down to one or two of the best, both on a risk basis and where we think we can make the most amount of money. Euro, pretty uninteresting. It's a trading range market between 111, 110.5, and 107 or 108. So this is something that's not interesting to me. And again, this through I would just see this and just eliminate it. Yeah, this inside day bar, it could go up, it could go down. I don't really care. It's something I would just eliminate right off the bat.
Actually, one of the pair you hate the most, isn't it? Euro USD.
Yeah, it's not that interesting to me. So again, that's easy. I just drill through these things and try to I guess quickly go through the ones that just don't interest me, and then make a brief note of the things that catch my thing, and then revisit that. GBP odd, same thing. A lot of noise. I can make this a case for this thing going lower. Again, you see you had this bar that kind of held up this price action here. I thought it was going to roll over, but this bar kind of held it up. But you have this bar that's and this bar that's overhead. So it's just noisy. A lot of thrashing around. I'd like to see kind of one or two more inside day bars, and then I think this thing looks like it does want to go lower and roll over, but I'm just going to avoid this altogether. There's just nothing here that meets my criteria at the moment. So we'll just eliminate that very quickly. GBP CAD. So, here's a case that I think a lot of people can get tripped up into, myself included. And there's a couple of offsetting things going on here where, immediately right off the bat, you'd say, hey, Mark, isn't this a triple top? And it kind of is. And especially, you had a huge resistance. We actually got out of this trade at 208.87 on Friday. I think we got out of that pair in about 3 minutes, 129 pips, and maybe just a little bit of luck there. But it went right to the resistance area and turned and closed on the low, which is something you'd like to see. And now you have this reversal. Now you have the inside day bar, and you'd say, okay, Mark, you got this triple top, this inside day bar, this reversal. Is this, a short trade? And it could be. So now this is what I would try and do. I try and visualize in my mind, the prices, and, what's it going to look like for the prices to, go down against all this noise right here. I don't think it'll be very easy for that to, first off, this is an uptrend. And secondly, just because you see the triple top right here, we wouldn't really even be confirmed until we got, way down here. This would be the neckline of the triple top, or, or at least till there. So this is a lot of, again, this noise right here. It's going to be very hard for this market just to get through, on one thrust. So again, you'd say, okay, there's a triple top. You had the reversal inside day bar. Isn't it logical that you put your pending order here and try and sell it? And who knows? I mean, you could come in, the Canadian dollar looks pretty vulnerable now. It's been going straight up, and who knows? All of a sudden, you walk in one day and it just, does a huge counter trend move. And I'm trying to pick a color here, not very successfully, that will provide some contrast. So, can it just do this? Just go right down through all of these prices right away? Maybe. I mean, if that is a triple top, maybe. But again, I think that there's a lot of obstruction right here. This is an up market, and I think this is like I don't know if you play golf. Sometimes you get a sucker pin location where it's always all the way to the left or all the way to the right, and you just want to shoot at the target. But then if you miss, you're in the water or somewhere. So this could be a sucker thing here where it looks like something, but this is still an uptrend, and I wouldn't be surprised for it to actually go something like this. And this is what I'd like to see. And the onus to me is still on the bears to prove that this bull market is over. So again, I think I'm going to stay out of this one. Only because I don't see a clean move. Even if I put my pending order here, again, you'd have to go through all of this stuff. And in order, if this was really going to work out, this would be, a 500 pip lower. And if it may just do that, and then that would be a horrible miss on my part. But I'm just going to stay out of that one for now. Let's see, GBP CAD, and we're just going through this pretty. So here's, here's your double top, your head and shoulders. This is a down market. We have this inside day bar, but you've already come off, a million pips. So I don't think I want to wrangle with that right now. But I did see this double top. I did see this, head and shoulders, and it was an interesting trade to me for quite some time. Pound yen. If I'm going to do, one of those yen trades, this is the first time, you've seen some kind of thing here. But to me, it's not a reversal like you see in the Swiss yen or the Euro yen. And again, I think these yen trades go a lot lower. So that's, again, it's already come off a ton. I don't see anything there. It's an inside day bar. Can it keep going lower? Probably, but, not a great risk reward to get involved here. I'd like to see more of a coil before I get short that market again. Pound New Zealand dollar. We talked about this. We have this reversal inside day bar. On first impulse, I wanted to sneak in a sell here, but I think that this guy is going to provide a bit of a resistance to any downward move there. So we'll have to check that out, and we'll talk about that tomorrow to see, how right or wrong I was on some of this stuff. Pound US dollars just going lower and lower. I don't really see a place to get in there yet. It's just downtrend, and if you weren't there for the wedding, you don't want to be there for the funeral. Okay, these are some of the stock indexes around the world. This is the German DAX. Again, you have this inside day bar. I mean, you have this head and shoulders. It all looks awful. You're sitting right at these support levels. Stock indexes look horrendous. You've already had a 10% move, so probably want to let them settle out before we take a look there. NZD CAD, I think we put that on our high list for tonight to put a buy stop above there. We're still about 45 minutes from close, and I like the look of that. NZD yen, I like this short. I put out a video last week that I think New Zealand dollar is net going down and the Japanese yen's going up, so I expect this over time to work lower. The key phrase there is over time. So you have a nice head and shoulders here on the weekly. Sorry, the monthly, which it has much more import because it's a much more longer time frame. Sorry, let me redo this kind of. This is more of the left shoulder, head, right shoulder with the neckline coming in. This is the New Zealand dollar, Japanese yen for you folks that didn't catch that right off. And we're sitting right at this neckline. So, any penetration of these levels, you have, again, this guy right here, these prices kind of providing a little, short-term support. So you kind of have to be mindful of that. As you get under here, you could get one of these. And this is monthly. I do expect it to go lower, but just like this, it could take a long time to work through some of this stuff. So you just have to be mindful of the time frame you're looking at. I'm also looking at a price gap, 500 points lower. So I'm always going to be looking to get short New Zealand dollar, Japanese yen. I should take away the word always, but that's predominantly the direction I'm looking at. But today, we've already had, again, quite a bit of a fall off. We had this inside day bar with the close a long way away from the low. So I'm just going to wait for this thing, and you have all this. So you have all this support here. Now it's got to get through all this mess. So hopefully we'll just, churn here, go a little higher, and find another spot. But nothing that I want to tangle with today. Is everybody finding this beneficial? Any questions, Peter? Is this going well on your end?
Yeah, no, going well, really well. We do have a lot of questions actually, but go through your.
Let me just finish it up. Well, almost
Yeah.
finished. So here's New Zealand dollar, US dollar. Again, I see this huge double top. This is something that I was seeing, January 3rd, and didn't put out a call, and I really regret that because I saw this leg coming. I see us going to the 62, but now you're at support. You got to get through all this mess. Got this inside day bar, and the same thing again. Your close is way off the low. You've already come down a ton, and you just want to see some work here. But then you have these bars that I think, put an, kibosh on any upside. So you're going to get some kind of action, churning here before we maybe get another nice move downward. So for now, I'm looking at New Zealand dollar, ironically long against the Canadian dollar. So even though New Zealand dollar, US dollar looks pretty weak, New Zealand dollar, Canadian dollar still looks intact to the upside. And we're pretty much through it all. Dollar CAD, I don't really trade a lot of. I don't know why. I've always hated this pair. I've never done well. We did, open at the very top, which suggests that, we may be at a short-term ceiling and this huge weakness in the dollar CAD, but nothing really there. Dollar Swiss, kind of interesting. I think that this thing looks like it wants there's some, open space here that I think that this thing is going to want to get into, that I'm certainly focused on. We have this nice key reversal here that I think is whatever, and we have a bit of a little triangle going on here that I'm watching. And so nothing really today. We don't have an inside day bar. We don't have a key reversal. We could, still get up in here and, mess around. But, there is some white space here that I think we get into, and the dollar is net strong. So I like dollar Swiss, long, and, I just don't really see a place to get in tonight that I'm really, eager about. But, that could work out to be a mistake too. And then dollar yen, same thing, has been going straight down. We got a little support here, which could work, in our positions for Swiss versus yen if we decide to take that. And that's basically it. Here's the dollar. It's just going straight up, which reflects, euro going down, dollar Swiss going up, dollar yen going up. So the dollar is in a, still an upward trajectory. And we talked about that at length in our various seminars and weekly video reports. This is probably a trend that's going to continue for at least another year. Oil, is new lows under $29 today. Platinum, new lows. And remember, so platinum, silver, oil, copper, all on new lows, gold not. So we have a bit of a bullish divergence in gold. And I think that that's, all the things. So what did we come up with? We, looked at the short list. We were looking at that short GBP NZD. I think there's some, short-term support there. So I'm going to eliminate that. And so I like these two trades for tonight. And no, I think there was, I'm sorry, there was also an NZD CAD. I didn't put that on there. NZD.
Yeah, NZD CAD long, isn't it? Yeah.
Long, yeah. So these are the trades. I like the diversification, if you will, because obviously spot gold is non-correlated with any of these. And then it's a question of, do I do one, currency pair and a spot gold, or two, and then which one looks the best? And again, I think, Swiss franc is dicey, Swiss franc yen. I mean, I'm going to do it for myself. I just don't know if there's something that, I feel so strongly about. And you can see that now it's kind of drifting, that the close is not so high. So again, this is why it's really important. I try and wait till the last minute. And if this starts drifting under and change, this whole complexion of this trade or whatever I thought about it it's changing as we speak. So this is the challenge. So it takes me about 30, 40 minutes to put my whole signals together, write them up, take the picture and then send it out. And then I want to send it out at or around 2 o'clock when everything closes. So I'm trying to manage things where I start writing up a couple things and give myself a little wiggle room such that 10 minutes before 2, if this closing price starts drifting lower, it would change the whole thing. So right now it is drifting lower, and I think I'm just gonna take that off. So I think what I've come up with for today that I really like is New Zealand dollar, Canadian dollar. We have this double bottom within the matrix of an uptrend. You have this inside day bar. We're going to sneak a pending order here. If it goes the other way, no harm, no foul. We won't get tagged in there. And I think the risk reward is pretty good. We have some open space here relative to the whatever 40, 50 pips we need to take here. I think it looks like actually a trade that I could get really excited about. And for some reason, I'm kind of excited about gold too, even though it looks kind of stagnant sideways. It's closing toward the low end. My whole philosophy is if we don't get put in here, and this could roll, I mean, this could be an inside day bar, that actually could roll lower. And the reason why I wouldn't want to go short on this one, even though this is a primary, is that you've got all this noise to the left now. And I'd have to visualize this price kind of going through all this stuff to, in immediate here, and then getting through all this stuff. And, so, if this thing's going to roll, it's just going to be heavy and probably go sideways, and we'll have to look at that. But if it turns around, it could be. So I think the pending order is sufficiently far away that if it's going to roll, we're not going to get triggered. If we are, we might get tagged into a good trade. So I'd put the probability of this. I'm kind of wishy-washy on this one, but I like New Zealand dollar, Canadian dollar. So if you come away with anything, I think that's what I kind of came with today. So why don't we look at some questions, and maybe you guys can alert me to a trade that maybe I'm overlooking here.
Okay, perfect. All right, so Sergey said a question a while ago. He said, hi, Mark, do you compile and maintain a watch list for brewing setups, or do you take a fresh look at everything and reset every day?
Well, look, I mean, there's only, a dozen, FX pairs and some other commodities. So all in all, I'm looking at 10 or 15 markets that I pretty much committed to memory on a weekly, monthly. I could tell you where everything is pretty much, in my mind. And, then I'm just looking, every day, where it settles, where it closes, if it changes, obviously it's fluid. So I come in every day. I think I understand where the main thrusts of these trends are, but things are so dynamic now and changing so quickly. And even if I'm right, last week we had a bunch of 300 pip trades, and then a half an hour later they're down 180 pips the other way. So you really have to be nimble, and I think it makes the case for even being more selective and maybe even overlooking some things that you might have put on a secondary watch list. So it's not difficult for me to go through this thing. This is a very elongated session, hour and 20 minutes with you guys, but it takes me much shorter to drill down to the few looks that I want to focus on.
Well, I think, and that's why this thing is a 2-week thing, because after week 1, you guys are going to start to see, oh, I remember that pair. I remember what the analysis was on that. And it's kind of in the short list in your mind. And at the end of the 2 weeks, you're going to have such a clear picture of the charts and the markets for that time period. And you're going to maintain your own short list in your mind without having to look at any piece of paper. So that's the whole point here, which I think is really, really cool. Trent says, can you clarify what a key reversal is? Cheers.
Yeah, sure. So a key reversal to me is when, and it's a question of where that occurs too. So it's not only a kind of a bar, and let me see.
There was a really great example actually in that trade where you said that you wanted to take it, but you ended up not because of that one bar that stood out.
Okay, so let's go and take a look at that.
I can't remember the pair.
The pound New Zealand dollar right here.
That's the one. Yeah, that's a good example of a key reversal, isn't it?
Okay, so I kind of move. It's kind of a loose term, if you will, but it really is saying that the market, like for instance, this is a key reversal where a market made a new high and then close on the low. Can you see that on this day? And the larger the range, the better. So it made a high up here and then close on the very low on what looks like, could have been a 300, pip range for that day. The same thing here. Made a new high and you closed on the lower end, so in the third quartile of this bar, if you will. Where are some other ones? So, here are some key reversals here. Let me just change the color on the upside. So here's some key reversals here where the market made a new low and closed on the high. And to me, what I like to see is, you can make a case, within these things, you could see some of those. But what I look for is at the top or the bottom of a major channel. So that, when you make a new high, here's a key reversal, which is at the bottom of this channel, and then it went higher. Here's a nice inside day bar right at the top, which then puts you into this whole move. Kind of here's a key, here's what I call an interim. So if you want to get involved in a trend that's already underway, here's a nice day where you make a new high, close on the low. This was midway through that trend, and now, you just put your sell stop here, and you're into it. So this is a key reversal. Is just it's a bar that stands out within the complexion of all the other bars, where it makes a move in one direction, and then by the end of the day it closes on the very opposite end. And then the bigger the range, the more prognostic that signal would be. So even though this was a down market, you can see at the same price, so at a double bottom area, you saw the price action. So I look at patterns and price action. What I mean is price action is how does the market behave at certain areas. So within this same area, let me just get rid of this. At the same double bottom area, here's one bottom, two bottoms, and then they reversed. Can you see that? Where they made a new low for that day and then closed in the upper quartile, if you will, of their bars. So more than midway up, and they're the blue, and so these things. So now based on this double bottom, you could have gotten involved in this. Just even though it's a short-term move, even though this was a down market, this was telling you right here, and that's why I was telling you, even that Swiss franc, even though it's a market that's downtrend, it's coming off hard, but when you start seeing a collection of these reversals, they put an end to the momentum, at least for the very short term. So if you're short, you may just want to get out there, and if you're aggressive, you may want to take a shot on the long side when you see something like this, and when you see a couple of these things in the same area. So a reversal simply means that the market goes to one level and then reverses, and by the end of the day, where it closes is at the opposite side of the range. And here's kind of a reversal bar that we were talking to as a potential obstruction. Again, this little bar looks benign, it's sitting in the middle of nowhere, but this thing made a new low, closed in the high, and then it's sitting right near these prices. So again, your mind, and my mind didn't see it. I was just so excited about this key reversal bar, that this was in a downtrend. This is what I look for, that I just leapt into this thing. Fortunately, we weren't put into the other thing because the market didn't confirm it, and that's the beauty of the pending order. My analysis was wrong, and we didn't get put in there. So that's kind of the beauty of the structure of my whole methodology. But I don't know how long this will contain these prices, and we'll have to see. Ideally, I'd like to see the market kind of maybe get back up in here and then fail, and then the more builds away, the less this obstruction becomes. But sitting right near this right now, to me, that's an issue.
Okay, that actually answers HP's question, because she said HP said this obstruction bar is more relevant because it is from the last week of last week's trading level.
Yeah, it's within the last 3 days of trading.
Yeah.
What
so
you
would
want
you
to
take that into consideration?
You want to see it build away for it to be less of an obstruction.
Yeah.
Yeah.
So if it was 3 weeks ago, it wouldn't be as much of an obstruction.
Right. And then tomorrow, I mean, you could see something where the market just slices right through it and does this. So it's either two things. It's either going to, hold this market, or this market's going to just fall out of bed and, and then I'll be on a ledge somewhere.
Yeah, because 800 pips not enough.
Right. Because I don't see but the thing is, what really got me excited is that I don't see these guys holding up this market for very long before this thing rolls over. That's the thing. So
Yeah.
so we'll have to see.
Okay, so Raphael said, so in pound versus New Zealand dollar, if after a day or so the price goes down a little bit more to pass that support, it may be a good trade. There does not seem to have to be any other obstructions after that.
We'll have to see. Ideally, what I'd like to do is see up, and again, I can't. So I'm trying to get rid of all this. So let's just draw on this thing. This may have to, come back. If you draw this out, you may just see prices start, having to come back to close to this area again before we see this failure. Okay. So, again, and I draw this in my mind. I try and say, okay, can I picture this going up? And the answer is kind of yes. Can you get one of these things where, you go higher and, to this thing, and then, you get one of these, and now again, you're further away and you've got one and more of these reversals. That's just another piece of information, and I'll have to look at that tomorrow. And when we, connect again, we'll take a look together.
Okay, and perfect.
The mystery will be, revealed one way or another. Somebody's going to be wrong here.
Yeah, that's the cool thing actually, because we get to come back every day and see what happened and see what the next part is and how you build that out. So that's awesome. So Sergey says, Mark, how do you decide to send a termination alert for the trades in progress? Do you look at lower timeframes?
That's interesting. Sometimes, I will see that it's come up against, I'll just have to say it's dependent on, market conditions. If I'm coming up against resistance, if I feel that, that there is some technical resistance there, and maybe I will drill it down to some, narrow time frames. But, very rarely I've, sent out, I think, 2 or 3 alerts in the last, 2 months to get out of a trade before the next email comes. Yeah.
Okay. So Kenneth says, where will you put the stop loss and take profit on NZD CAD?
Okay, so let's go through the trade right now, and I use these other charts because it just gives me.
Well, those are the NetDanya charts from
these
NetDanya.com.
Are NetDanya, just because NinjaTrader, it's just not as precise to find the exact high and low. So again, we're closing nicely toward the high end. So here's the trade, and it's 1:30, and this is about the time where I'd start to write it up, unless it materially changes in the next 20 minutes. And I'm sorry, when I go to this window, it makes the chart very faint on your end, and I apologize. It's not me. I wish I could change it. So let me just give you the ranges. I'm going to write this down because while I'm writing, I've got to get these signals out. So we're going to have to conclude this fairly soon so that I can give these trades out also. So let's just write this out. You guys will get the trade ahead of everybody else.
Awesome. Insider's track here, guys.
So
you can hear the pen and paper go out.
The high is 0.94049. So let's just say 9405 is the high. 9405 is the high, 0.9405. And I'm prone to mix up decimals all the time. And then the close is 0.9383. Okay. So I typically put my buy stop 1 or 2 pips above the high. So in this case, let's put it at 0.9406 buy stop. And then typically, and again, this is a pretty narrow range day, etc. I found that it's a fine line where to put the stop loss, and I want to put it in an area where, again, my thinking is if it goes higher and thrusts into this open space area and then starts coming back and then going through today's unchanged, which is 93.83, let's say, that's not the price action that I want to see. but I don't want to put it right at unchanged because sometimes the market will retrace unchanged and then go back in the direction we want. So I'm trying to, create a thing where it's not so close that we're going to get ticked out only to see the trade continue in the direction we thought it would, but not so far where we're going to take a risk that, is beyond acceptable or prudent. So typically I have found, and it depends on the size of the bar, that between 20 and 35 pips, and it depends on the volatility of the pair and etc., is usually a good space under the previous day's unchanged. So right now we're trading at 93, call it 83 as the today's close. So I want to put this about 20 to 25 pips lower than where the unchanged is. So let's call it 25 pips. So that would be, call it 57, which makes this about a 49 pip risk. So if we bought it at 94.06 and we put our stop loss at 93.57, that would be, am I doing that right? That's 49 pips would be a stop loss. And people say, wow, that's so high. And okay, so we'll actually enter that on the trading platform, and I'll show you how I go through this on a money management algorithm also. So we'll just execute the whole trade. And then the take profit. So now you can see that the recent highs are right here. And again, the highs are 95.72. And our trade would go in at 94.06. And I'd want to put this somewhere above the highs. I found that, right around these highs, these markets set back a lot. And this may take 2 or 3 days to get there, although last week it took about 3 minutes on some of these trades. So I want to sneak this in somewhere underneath these highs. And I'm going to say, this environment might be quiet or whatever. Let's just, let's see what this high is here. It's 95.30. So let's put our take profit at 95.27. 95.27.
Do you ever consider the spread?
No. Not really. And we're putting it in a quiet time, so maybe the spreads could be wider, and so you could be triggered in because the spreads do widen. But look, it all comes out in the wash. So let's just take a look. We're going to make perhaps 121 pips on the upside, 121 for a 49 pip risk. That's about 2.46 to 1 risk reward. So that's a nice trade by anybody's book. And again, I may, once I start seeing this thing move, if it still looks like it's going, I will, place the top, the take profit, further and further away. So that's the parameters for today. We're going to put a buy stop 94.06. Our stop loss is 93.57, and the take profit is going to be 95.27 for 2.5 to 1 risk reward. So now I go to my trading platform, and I first off get out the trades from yesterday. So these are the open trades that didn't get triggered. So we're going to close these out, and this is a demo for purposes if anybody has any questions. It's about $28,500 in there. Started just a few weeks ago at 25,000. So we've made 10% thus far, just in a week or so. So anyhow, we're going to get rid of the trades from last night, cancel these pending orders. And if, in case anybody has any question, all pending orders should be canceled, before the start of the next session. So let's go and execute this, see what the proper, risk reward is. And I might have to bring this screen on over here, Pete. Let me see. There's a calculator on the emails that I send out, and I'll show you how to use that. So let's go ahead and execute this trade. Where's this thing? Okay, let's execute this trade. Okay, so right here, if you come under home and go to Forex calculators and then drop here to position size calculator, you will get this thing. So let's go to the NZD CAD trade right here. The account was 28,500. I typically risk a 0.5%, 0.5. our stop loss was 49 pips. So now, according to this, I can do 0.423 lots. Does everyone understand that? So it doesn't matter if my stop loss is 149 pips, 75, 87. You know, if all I want to do is risk 0.5%, that's all I'm going to risk on a trade. It doesn't matter if I'm risking 29 pips, 229 pips, or not. You basically just reduce your lot size, and this will automatically tell you how to do that. So basically, you know, 0.423, I'll come here and where's this NZD CAD? So, you know, hopefully everybody got that. And here's the NZD CAD right here. So I'm going to enter this on my trading platform. We're going to put a buy stop of, what was it, Pete? 423? How many lots?
It was 4.2.
4.2. Okay, so we're going to put a
Yeah.
buy stop at 94.06. We're going to put our sell stop at 93. What did I say? 57.
Mm-hmm.
We're going to put the take profit at 95.27, and I'm going to buy. I should have put this in first because it may change the whole thing.
Yeah, they sometimes get rid of the.
Yeah.
I don't know why.
Yeah, it's all right. Well, it's probably a good thing. Okay, so here we've got the trade. Buy stop 94.06, sell stop 93.57, take profit 95.27, and you know the world comes to an end. I'm going to risk 0.5% on this trade, and that's what I go through, you know, for each trade. And you know we can do the same thing for, you know, gold, and you know, figure that out also. So gold would look something like this. Where come to spot gold. And here's the inside day bar. I don't know why it changes color. Yeah, it changes when I want to. So the high is 1,093.38. So I put, you know, a buy stop at like 1,095. Today's close is 1,089. So I might put a hair under there. Put it at like 1,087. And you know, I'd put my you know, my buy stop, you know, somewhere up at, you know, above here, like 1,000, you know, 118 or something, and then I just give myself the room the next day to, you know, change all of that. So buy stop in gold is 1,095, sell stop 1,087, limit order is 1118. And again, sometimes I put my, you know, take profit intentionally away from the market, just to give myself an opportunity to take a look at the market action the next day, and then update you on the next email if I want you to just get out of the trade, or, you know, adjust the take profit accordingly. So, you know, that's a pretty good session for today. You know, any, you know, questions, I'll take, you know, one or two. I need to write up these signals, send it out to everyone, and then we're going to be revisiting tomorrow and get a chance to, you know, go in this in a lot of detail, you know, in the next 2 weeks. So if I don't get to everybody's question today, you know, just save them, and you know, we'll revisit it and see how things worked out. But Pete, is there one or two things that we, you know, want to address here?
Yeah. If you could just answer them really quickly,
Sure.
and
Yeah.
then we can go into more detail into them if you want tomorrow.
Yeah.
JD Charisma says, if the spread is too high, do you still advise us to take the trade? My spread on gold is 70. So I guess just probably change broker, right?
70 is, you know, is that's appropriate. That's fine.
Okay.
Because look, yeah, I mean, yeah. So let's see what Burndale Capital is. The spread is. So yeah, it's about right. It's 1088.94, 1089.10. So that's about, yeah, it's about 20.
Yeah.
So
So
yeah, it's
7.
a little bit
Yeah.
wide. So if you want to check with Burndale Capital, you might want to, you know, check with that. But you know, 70 is not a big deal either.
Okay. So Kenneth says, is it possible that you might take two opposite trades on the same day? And how do you decide on the stop loss and take profit? And why do you compare gold with other commodities?
I just compared gold to look at just in terms of divergence. So we're looking at most commodities going to new lows, making new lows, and gold is hovering above its old lows. So it's exhibiting and it may be premature. It may just be waiting a while before it bursts to new lows again too. It's just something that I'm noticing now. But when I noticed it in the Nasdaq, it was a pretty even though it took 3 months to show its hand. It was pretty, a good divergence thing. So, but I said, even on its own merits, I like the gold trade. It has a double bottom. It has this inside day bar. Is it a perfect trade? No. If you don't want to take it, that's fine. Again, the nice thing about these pending orders, if my market, I think we had a pending order the other day in gold, and right here, and I was, wrong here. This market made a key reversal right here. I don't know if you guys can see it. Maybe I can, let me revert to these charts. They're cleaner to look at. And we didn't get ticked into it. And, so actually, yeah, right here, this day was a key reversal in the direction. I thought it would take off, put in a buy stop above here at 109.6, I believe it was. Market never got there. We never got ticked in. So, this is a somewhat of an ambiguous trade. If you don't want to take it, that's a nice thing about this, subscription thing too. Nobody's putting it in your account but you. And I think what I'm trying to do here is give you some of your own abilities to make some decisions on your own. So when I send through trades, you can say, hey, this is crap, and I think whatever. So the idea is just to give you your own capabilities.
Okay, perfect. And then one more question. Have you looked at TradingView as a single alternative to both NinjaTrader and NetDanya?
Yeah, I know them. Look, I don't need a lot. This kind of works for me. I know TradeView. There's 1,000 chart services out there. Some have different time frames. So this is what I like. NetDanya and NinjaTrader have different time frames. And if I'm satisfied that this is closing within a certain time frame and it's looking okay, like for instance, this Swiss franc trade. Okay, it's kind of like drooping now. It's kind of closing, it's drifting. But by 4 o'clock, 2 hours from now, which is the closing time for here, we may be at a completely different look on this. And, it may close toward the high by 4 o'clock and may look a little bit different. Yeah, I think I'm just going to let this one go. Even though I have a feeling we could, it's fair. I'm going to let this one go.
Let it slide. All right, yeah, that's cool.
I think we have 2 really good trades, and certainly I like this one. I really like this one. And again, I know people like action; they want to be involved everywhere. But if we can nail, 125 pips or even 300 or 400 pips on this trade, I think you'd be happy with that. So, even if you just want to do with this one, I think this is this is a high probability trade. This fits exactly, So again, I look at the condition, or phase of the market. This is an up phase. We have this double bottom. We have this key reversals close by. We have this inside day bar. So it meets like all of my criteria. And then the fourth one is the ultimate thing, which it needs to be confirmed by the market. So that's why we put the pending order in. And if it's sent back after that, then we did our work. And guess what? We're wrong. Put in a 0.5% risk, and come back the next day and do it all over again. That's the idea.
Okay. All right, perfect. Well, thank you so much, Mark. Really, really appreciate that. That was 1 hour and 46 minutes, a lot longer than what we were meant to go on for, but you went into a ton of detail, which is so cool. Opened my eyes to some stuff every time. So I'm really looking forward to the next 2 weeks. Guys, thank you so much for joining us, and we'll see you tomorrow. Thanks
again. And please provide us with your feedback, for the next session, so I know that I'm on the right track with you.
Okay, awesome.
I'll see you all tomorrow. Thanks again.
Thanks, guys.